This video is about reducing debt stress. So as always, while I can't provide you with financial advice specific to your personal situation, what I'll share is educational. And if you need further help tailored for you, we always recommend seeking professional financial advice, especially if you're feeling overwhelmed with your debt situation. It's easy for our judgment to become clouded, and it's then we're at risk of falling for a quick fix or an overpromise. There are many debt companies out there that make unrealistic promises and that are also not registered with ASIC. The number to call for free financial counselling is the National Debt Hotline, 1-800-007-007. So last video, we walked through the first step to reducing debt. We took some time to understand 3 debt categories and listed our debts within each category. If you didn't catch this step, check out the last video, then come back to this one. So now you have your debts out of your mind and sitting on a page. The broad idea behind getting on top of debt is to minimize all repayments and first focus every cent that you can gather in your life to pay off the highest interest loan first. Then once that's gone, focus on the next highest interest loan, etc. This is mathematically the fastest way to get on top of your debt repayment. But of course, credit card or 3 might have sounded like a good idea initially. I hear people say often, oh, but the frequent flyer points. But if you're struggling to balance multiple repayments at multiple interest rates, debt consolidation could be the answer. Debt consolidation or refinancing involves taking out a new loan to repay your debts and any outstanding interest, so you only have to pay one single loan weekly or fortnightly or monthly for that life of the loan. By refinancing multiple debts into this single loan, you can also potentially save some money by reducing the amount of interest owed on your loans. Alternatively, you can apply to take out a balance transfer card, which can be used to pay down credit card debt. If you've accumulated a large balance on a credit card with a high percentage or interest rate, transferring that balance to a card with a lower interest rate, ideally 0% or no interest for at least a year, some do 18 months, will allow you to focus on paying back that principal without interest and get ahead a bit quicker in that early phase. And this can potentially save you significant amount of cash that would have originally gone into interest payments. But debt consolidation is not for everyone. It can also get you into a deeper debt spiral if you're easily swayed by the temptation of more credit. So let's look at the ins and outs. As always, the key to making good financial decisions is to arm ourselves with knowledge and awareness and good questions to ask. So let's start with why we might consider debt consolidation. So debt can, as many of us know, become unmanageable for a range of reasons. You may have lost your job, as many have as a result of the coronavirus. Or perhaps you've fallen behind on bills, or your credit card debt has snowballed out of control. Maybe you've inherited the debt or have responsibility to repay the debt because of a partner. Maybe it's a bit of all of the above. So establishing a clear plan always helps keep you focused and allows you to take control of your finances and get back on your feet. So some of the key advantages, and there are quite a few advantages of consolidating your debt, the first of which and possibly the most desirable, is that it helps you transform the stress of multiple debt repayments into a single streamlined payment with an end date in sight. For many of you who have spoken to me about your debt situations, I always talk about having a debt-free date and really spending some time visualizing that in what does that feel like? How will you, where will you put your money once it's no longer going into debt repayment? How do you feel about that? How do you speak about your money? What other dreams will you allow to unfold once the debt repayment is under control? This is incredibly important because this is the light at the end of the tunnel and our motivation for bit by bit squirreling away until we get on top of our debt. So secondly, having less debt collectors hanging over your head can also make you feel more in control of your financial future. It also means there's less chance that you'll accidentally miss a repayment, which can ultimately impact your credit score. Consolidating your debts could also lower the repayment figure, so helping to make it more manageable for you to budget to meet those repayments. And there's also the possibility that the interest rate paid on the loan could be lower than those on your multiple debts, multiple original debts, which of course leads to savings over the long term. So if debt consolidation sounds useful to you, what are the first steps? So first up, as we went through in detail in the last video, assess your financial situation by identifying all your loans or credit cards or different debts you might have, how much you owe in total, what the interest rates are, how much the minimum repayments are on a weekly, fortnightly, monthly basis. Know your facts, have an awareness of your current situation. Once you have a good understanding of the size of your debt, then you can start investigating the options in the market to consolidate or refinance. So consider whether you need the assistance of a finance broker or another professional advisor or the support and guidance of a financial counselor to assist you in understanding the differences between the different products available in the market and whether certain products may be more suited to your individual needs and financial objectives. So it's important, like everything we say, to, if you're going to use a broker or a financial counselor or a bank, deal directly with the bank, to go and speak to multiple banks or a couple of different brokers or call a financial counselor and get another perspective. And then it will be much easier for you to judge what the right decision is for you. So part of this process should be figuring out whether you can actually afford the new repayments. So this is incredibly important because the last thing you want to do is commit to something that's unrealistic. So it's important to compare the interest rate, fees, any hidden costs of the new loan against your current loans to make sure you're getting a better deal than you are on currently. And there may be other costs involved in refinancing your loan. So check for penalties for paying off your loans early, establishing fees, legal fees, servicing fees, and stamp duty. All these factors are important to consider before consolidating your debt. Be on the lookout for secured loans. So that's where you put up an asset, such as your car or home, as security for the debt. So while the interest payable on secured loans may be lower than other forms, you're also putting your car or home at risk if you default on your repayments. So if you do, the lender is essentially entitled to sell that asset to make the money back on which you borrowed. So you just need to be aware of this and make a calculated decision. If you think that's a very realistic situation for you and it's much better to get that lower interest rate, or if you think that's too much risk to take on. Also, at the moment, some banks are providing 6-month loan repayment deferrals to customers impacted by COVID-19 crisis. So as this initial 6-month period comes to an end, if you're still facing financial hardship or difficulty or reduced income due to the pandemic, you may be eligible for an additional 4-month repayment holiday. So speak to your advisor or broker or bank or financial counselor to see if you're eligible for this. Another thing to be aware of is if debt consolidation will impact your credit rating or credit score. And this is essentially a rating that is collected behind the scenes from all the different financiers, and it will impact, if you have a good credit rating or a bad credit rating, this will impact your ability to get credit or maybe a home loan in the future. So you want to make sure you look after your credit score. And debt consolidation can either help or hinder your credit score, depending on how disciplined you are. So if you're on time with your repayments, or you eliminate and reduce your debt, you can improve your credit score. Alternatively, if your credit score could be damaged if you continue to use your credit card after you pay off your balances, or if you're late making payments on this consolidated loan. So what's the verdict? Debt consolidation can give you a whole new lease on life, and as we've mentioned, can help you catch up on your bills and stop living paycheck to paycheck, and give you one singular focus rather than being overwhelmed by having multiple debts to both think about and repay. So it can also change your spending habits for the better, helping you learn to live within your means, which is whether you're repaying debt or in saving or investing mode, always a good way to learn to live. And obviously commit to not accumulating further debt in the future. So it's important you do your homework and make sure you're making a decision suited to your financial situation and needs, as there's no point consolidating your debt if it's going to leave you worse off in the long term. So as I shared at the start, if you're feeling overwhelmed, we recommend reaching out to a financial counsellor. So give the National Debt Hotline a call on 1-800-007-007. Good luck with your debt busting, and I look forward to hearing about your debt-free days, when you reach them, but also how you imagine them, and keep that visualization strong and regular in your life, and you will get there sooner than you believe.